Okay, we are recording. So if you can't hear us, if you're on Facebook, you're not going to hear me. Watch the screen and you'll figure out what we're talking about. For everyone else on Zoom, hello, this is Sergio. This is Matthew. We're Longevity. This is Wealth Wednesdays, episode 16 or something like that. Is it 16 or?
We won't even do episodes anymore.
But we do have a bunch of episodes, right?
We have a bunch of episodes. You could backlog on YouTube for sure. A lot of it will seems sort of outdated, but the principles are still there, so you'll still gain value from watching those. You want to be heard on here, you can be heard on. Yeah, you're live.
Audio should be good. They're gonna get that feedback.
Except for that loud.
Yeah, it's on Facebook Live as well. You can use Zoom.
Mute Zoom?
Yes,
You've already muted Zoom, so
Zoom's already muted, so that's not working.
perfect.
so also turn off both your sound.
Yeah, both our sounds turned.
Yeah.
Okay,
Mute that.
okay,
That's Zoom.
that's Zoom, but now they can't hear me on Facebook.
Facebook may be able to hear you. This is only on Zoom. If you go to Facebook,
Oh, okay, they can hear me on
it
Facebook.
should be separate.
Wait, why are you on Facebook?
Because we're doing a live stream and we're doing the Zoom recording at the same time.
Because Sergio said, why not? Let's just do both. There we go. He's on Facebook right now. The
Okay, let's get
ingenuity
right
on
into
Slack.
it now. We
All right,
have
let's jump in.
Sorry, I keep hitting that button. I'm so
Okay.
sorry.
Let's just jump in, Sergio. We're good.
Okay, so what's the date today, dude?
So November 30th,
Okay.
we just had some news come out from Mr. Powell. I keep saying Colin Powell, not Colin Powell, Jerome Powell.
Yeah,
And the stock market reacted to that with quite a big move up.
yeah,
So
yeah.
let's
Keep
start
talking.
there,
Okay,
and we'll talk about inflation today as well. And really how much power this gentleman has right now
okay.
on the stock market, and I say the bond market too. and
Bond market,
everything
100%.
else, crypto.
100%. Okay, look at this first hit right here. So Fed Chair Jerome Powell says smaller rate hikes.
Mhm.
Okay, so what has happened in the past year?
Past year since beginning of
Interest
the
rates have
year.
been going up.
Interest rates been going up since
Right.
what?
I don't know, like March, February 2022, maybe. So interest rates are going up. With interest rates going up, the cost of living goes up. Right? As the cost of living goes up, people start pulling out of the stock market, right? Like, so let's pull up the S&P. So people pull out of the stock market. We see these, here's the high. This is January 2022. And we hit a low here in October. And, we've been moving higher on stocks ever since. So why the move down? Higher interest rates, higher cost of living.
Mhm.
What
Higher
else?
cost of borrowing.
Higher cost of borrowing, which higher cost of borrowing leads to higher cost of living, higher cost of food, higher cost of energy, higher cost of rent, higher cost of pretty much everything, right? So we've seen a higher cost in all these goods. And while that's happening, we have the stock market doing its correction. And we've been watching this, for the past little while.
Mhm.
So I find,
Watching on the way up in 2021, wondered how long that was going to last.
yeah, and we were saying, it's time to be cautious as we start approaching these levels because things look a little extended. Now we have Jerome Powell, and people don't know who that is. That's it's like the boss of the Federal Reserve, which is like the United States's central bank. Like here in Canada, we
Bank of
have
Canada.
the Bank of Canada.
Yep.
Federal Reserve is like the US's Bank of Canada.
Yep. Not fully restricted or governed by their government.
Right.
That's the bank that lends money to the government.
Right. So today we have that headline. So let's go back to Google. Jerome Powell says smaller rate hikes. That's just the headline. I haven't even read the article yet. But it looks like on that headline, on the promise of smaller rate hikes, the stock market jumped quite a bit. And you could tell that the stock market jumped by this green candle. And what's special about this price movement, right? Like, why is this price movement? The candle represents price movement, right? So here the price of the S&P was 394. After that headline, smaller rate hikes to be expected, we close at 407.
$14 jump.
It's quite a bit. And this is a daily candle. So each candle here represents a day of time, like a period of time, 24 hours. And today's candle just took out the previous 1, 2, 3, 4, 5 candles. Now the question, now I just want to be truthful. Like when I see this, when I looked at this before the news, Jerome Powell's statement, I did think that this would be a potential area for a continuation of this downtrend. And now I'm not so sure with these, with Jerome Powell saying that there's going to be smaller rate hikes. I didn't factor that in when I was thinking that this downtrend would continue.
Yeah, the news can break the cycle, and I think maybe there'll be a breakout.
I think it's possible. I think now, since that statement has come out, we could actually break the orange line, stay above it, and head higher. But the fact that I know it's a headline that moved price has me think that this could be a fake out as well to the upside.
Okay.
Right? Like Jerome Powell stating that he's going to do the smaller rate hikes. All the investors pile in, and you could tell they all piled in by today's candle. And it's just, they're just going to wait for a bigger group of investors are going to wait, maybe for price to head a little bit higher. And then a bigger group of investors are going to sell.
Yeah, and you can look at the RSI, it's not particularly high.
Right.
It looks.
So what's the RSI? The RSI is this orange line. It's an indicator. It measures how fast price moves. So how fast the S&P went from 300 to 400 or 400 to 450.
Momentum.
Yes, how fast price moved. Now, what you and I pay attention to is these levels here where the dotted lines are, right? Top and the bottom. Where when you're above, you're what's called overbought. The indicator showing that you've been buying has been happening and it's slowly starting to exhaust itself. Okay. And right now we're not there. So
It spiked up and still has some way to go.
like it's in a downtrend. It's in a downtrend. We could see a fake out, a move maybe back to 430, which kind of takes us to this level. And then there could be a sell-off here again. And this news is just a fake out to get all the retail investors piled in. And that's a theory, it's just kind of, it's a theory, but I've seen these type of things, happen before. So the market is rejoicing, the market's cheering. Too low FPS. Let's go back here. So the market was cheering for those smaller rate hikes, which means stocks are going to go up on the news of smaller rate hikes or no rate hikes. And stocks will also go down on any news of more aggressive rate hikes or stronger rate hikes.
Yeah. And it's not like no more rate hikes or we're gonna lower the
Exactly.
rates. We're still raising them at a lower rate.
Exactly.
And so we read the headline. Does that mean smaller increases or less frequent? It looks like smaller increases.
I think it's smaller increases. But why the market's so cheery on this is like you got to look at how fast rates have gone up. And you got to look at the cost of living for people. When their mortgages, the cost of the mortgage go up by $500, $1,000. When their gasoline, right, or the price of heating and energy is going up 12-15%. Any news that says, hey, inflation's cooling down, like we're going to have to reduce the rate hikes, is going to be positive because that means there's going to be more ability to borrow.
Yeah.
Financial conditions will ease. And even though you shouldn't probably take on more credit all the time, even though the conditions are easier,
Yep.
People will.
Yeah, corporations will, governments will, and people can refinance.
And people that what?
People can refinance loans that they have,
Yes,
At fixed
refinance,
rates?
yes.
kind of cool off. They have more money to invest, save, spend,
Yes.
whatever they choose to do.
Yeah, right here, Washington, Federal Reserve Chairman Jerome Powell confirmed Wednesday that smaller interest rate hikes are likely ahead, even as he sees progress in the fight against inflation. And you know what? The thing is, that isn't really news for a lot of people. Like, at least not for me. Like the last meeting that we had, he was being super hawkish, meaning he was being very strict. He was encouraging strong rate hikes and a lot more of them.
Yep.
And we were talking about this. It's like, if you look at yields, like if you look at bond yields, and the reason why you want to look at bond yields is because they reflect the price of mortgages and the cost of borrowing. It's like, if these bond yields were going to go any higher, like people would not be able to afford their homes. Right? People would not have been able to afford their homes. Like,
Move this screen real quick.
the screen here.
Just move that over. Yeah, so we were bottoming under 1%, even under 0.5% for a little while. And the percentage of increase is so crazy.
It's large. And okay, and this was the pandemic.
Yep.
Right? So this was your pandemic, all your pandemic lows. And what was the bond yielding? 66 basis points in 2020. That's how much you got paid if you had this bond. And then come what, December, where are we now? We're November, so like September 2022, you could get your bond yielding 4%. So this is September. So that's a pretty big difference. 4% versus 66 basis points. So 400 basis points versus 66 basis points.
So you had a 10-year bond at 66 basis points. Now you're trying to sell it. No one wants to buy it.
No one's gonna buy it. You're selling it at a loss.
Yeah, or holding on to it.
Or you're gonna hold on to it and hope that yields go back below 66 basis points. And hey, in Europe, they've been negative, as you know.
Yeah,
They've been lower than 66 basis points.
They've hit negative on 2 occasions. And I don't think we've seen that anywhere else. I think it was an African country that went negative as well.
Yeah, maybe, I don't know.
But Europe, Western world, that's the first time we've seen that.
Yeah.
Crazy.
So Matt, the point is we were saying is like, if this continues to just head higher, where, now we're beyond 400 basis points, we're at 500 basis points or 600 basis points. It's like, your home is now not affordable for the majority, for your average, not even your average household, your above average household.
And yeah, I'll say, I know a lot of real estate agents, I asked, what do you think about real estate prices coming down? And a lot of them are thinking sell. They want to sell as many houses as they can.
Yeah.
So they say it doesn't really matter because the price, and it kind of means as the interest rate goes up, the price of the house will come down and it'll equal around the same amount monthly, because that's what people can pay. People on a monthly budget, and a high percentage of their income is going towards just paying for food and a place to live.
Right.
That being said, when this happens, the prices will go down, but the actual cost of a mortgage is going to be about the same, because it's now majority of the.
Maybe higher, actually.
It could be higher.
Yeah,
And
even higher.
when it gets too high, that's when people will default.
Exactly.
We don't know when
exactly
that is, but we see prices are kind of
So-
have this relationship with the interest rates, where interest rates go up, the price comes down, and we saw during the pandemic crazy high prices for homes. And
everything, home
Everything.
stocks,
got it.
crypto, Bitcoin, everything just shot up.
Yeah, and with homes, it's like interest rates are so low, you can now buy a more expensive home. It makes that house worth more money.
Correct.
And people don't really think of it because they're like, I'm still paying the same amount. But if you go to sell that house,
I don't think a
now
lot,
you're
like,
gonna sell it at a big loss.
yes. And a lot of people, especially in their 30s, 20s, maybe 40s, they've never been through like a high interest rate cycle. They've always experienced ongoing decrease in interest rates, right? Like if we zoom out here, let's do it, right?
Zoom out, it's many decades of a constant downtrend with these blips that, you know, you might think, oh, 2 years where it's going up is crazy. And the long scheme of things, it's just gonna come down again.
Yeah.
And we've just been heading towards zero for so long, got close to it, reversed, and then had this large jump upwards.
Yeah, and the bottom was in 2020. So we bottomed in 2020. We did like that 1000% percentage like increase. We've, you know, and if we're getting too technical, like, I'm sorry, I'll try to simplify it. We're above the average, the 200, this is a moving average. So it calculates the average yield going back 200 periods. So now we're above average. We're above the 200 period moving average by quite a bit. Let's
For
zoom
the
in.
first time since when?
First time since
It's like it touched a couple years ago.
it touched a couple of years ago, it held, it came back down, but it was 1985. It's the last time we've been above the 200 period moving average for the
Right,
10-year
like that.
yield,
That's crazy.
right? So to expect this to just continue to go straight up is kind of foolish, I think. So now we could probably start seeing mortgage rates bottom out maybe for a little bit. Like, we're not going to see such a drastic change. I think we've got hit. Like, for a lot of people, a 66 or 50% increase in their mortgage payment is enough,
Oh, God.
right? Like,
It can
that's,
be crippling for a lot of people.
and it
that's,
is.
In 2008, there were a lot of foreclosures in the States,
Yes,
and that led to a lot of people building a real estate empire off of that.
off all the deals.
And you think that's what we're trying to avoid now, is that happening again?
Yeah. And let's see, I don't know. At the end of the day, we'll see what they do. At the end of the day, they're gonna have to take on more debt to keep asset prices higher. And I don't know if in the long term that's good for anybody. So yeah, like, I think inflation, we could say we got to be comfortable with the prices that we're seeing now for things. Like, I was happy to see gas back in the 130s. I'm not convinced if this move up in the stock market is legit. I'm gonna wait a bit to see if it's a legit move up. And what I want to see, I'm gonna delete all this stuff here. I want to see price get above the 200 period moving average on the daily time frame, right? I want to see price stay above, and I want us to get above this trend line. Like, I want to know that this trend line has been broken.
Yeah, not coming down below that again.
We're above there. It stayed above for a bit, and we're probably going to head higher. That could happen. That could play out, and I'd be prepared for that to be sold violently, because there's still more rate hikes. There's a few more rate hikes. They haven't been fully absorbed into the economy yet, but we're getting there. I think we are getting there, and we might have one more vicious leg down in stocks.
It's definitely possible. I mean, the S&P will keep on, will reign. A lot of these assets that are just one equity, when they have these moves down and there is no coming back from it, they do have that dead cat bounce.
Right.
And you kind of see when things come down, there'll be those false senses of hope where people start to pile in, only for it to go down more.
We could be in the middle of that right now, right?
Yeah, and where did we last be? When were we last at this price? 2020 or 2021?
2022 July, we were here.
Okay.
And then before that
before
that was what, 2021, 2020? Yeah, so April 2021, give or take. So we're back at April 2021 levels.
Mhm.
And it looks like we're heading higher. Like, this is the monthly time frame. So every candle is 1 month. And to me, like, that's November. That's November's candle right there. So that's how the month of November is going to close. Right? So if you use the monthly and not the daily, so remember I was drawing the trend line here. See this trend line?
Mhm.
So on the daily, I tried drawing the trend line like this. You see that?
Yep.
That's the daily trend line. But when I use the monthly, which has more merit and value, you can see that we've already broken the trend line on the monthly.
That's right.
So with those two factors, and now seeing that close, which I'd say is a very strong close for the end of the month, like that just happened today. This candle looked very weak earlier today, and literally the price action today just strengthened it.
And I see some other big candles that are green
Yeah.
and red. Like these two here came after a red.
Correct.
That kind of strikes me as being a little bit significant.
It's very significant because it's saying that you had a lot of selling pressure
Okay.
that was actually overcome the buy. Like there's a lot of selling pressure, but this buying pressure 1 and 2 is actually overcoming. It's actually stronger. So this is serious money coming in.
Wow.
Okay, this is a very significant trend line break right there. Okay, if you see it here on the daily, the trend line break happened for a while. Right, so if you were focused on the daily time frame like I was, you didn't notice the monthly breakout. You didn't notice that monthly breakout. You're looking up here at this 200 period moving average in this trend line thinking that's your bear signal. But the guys who are watching the monthly are laughing at you because they're looking at the monthly signal.
Yeah. And how long ago was this? You said this
was October.
okay, got
This was October of just this past year. Okay. So what are we talking about? We're talking about stocks. We're talking about bonds. We're talking about that relationship to our cost of living. Like you got to get right now. Stocks are going on this uptrend that we're just talking about, and the cost of living's higher. So it's ironic that when the stock market is on sale, that's when credit card balances are at all-time highs. Right? Like, I think there's some Fred data. The credit card commercial. Yeah, like household and debt. Let me see here. I could have sworn I was yeah, you see, like household debt is at all-time highs, going up, maintaining its uptrend, right? Maintaining its uptrend. This is not even credit cards. Let me find credit cards. Yeah, this one, credit cards and other revolving plans. Okay, so look, we're back at all-time highs for credit card and all and other revolving plans. We had a dip in 2020, so they print a bunch of money, they give it to households.
Yeah.
Everyone pays off debt. People pay off debt. People pay shit off, whatever.
Comes right back.
And then boom, comes right back up. Before the pandemic levels. So we have debt at higher levels than before the pandemic, and we have way higher interest rates
To service that debt.
than before the pandemic to service that debt.
Wow.
So, okay, we have a breakout on the monthly in stocks, and we can head higher, 100%. But does it mean we're going to head higher and make a new high? Or are we just heading higher for us to sell off again and make a new low? And, when you start looking at these type of statistics, like maybe that could be the thing, like maybe the economy's not doing so well. And it's funny that when we make this bottom in the stocks right here, so at 350 on the S&P, people are strapped for cash. They can't buy stocks. They've stopped contributing to their mutual funds because they weren't working with a financial advisor. They stopped contributing to their seg funds because they weren't. And the stock market's taking off now, and it's going to leave them. And then it's going to rise, and they're going to be, hey, stock market's going up again. They're going to pile back in. They're going to increase their contributions, and then boom, it's going to come down. Right. So I just think people need to be aware of like people watching this. People need to be aware of these potentialities, my lad. These potentialities. I mean,
The 200 period moving average.
yes.
We are where?
We are far from it on a monthly time frame.
Okay.
So the 200 period moving average on the monthly, it takes us to 209 on the S&P.
That's since that just started in
We got our first read on this
2000.
2008.
Okay, so it's even starting lower. Okay, because you had one on there earlier. I thought it was it 200 weeks?
Well, it's always a 200 period, and then it's gonna alter based on the time frame that you're on,
Gotcha.
right? So if you're on the weekly,
Here we go. Okay, this is what we were looking, okay, this is what I was looking at with you a couple of hours ago, that it just touches.
right,
It touches the 200 weekly moving average.
right,
And if you look back, the times it's dipped below, it's always reversed. 2020 went quite a bit below and then came right back up. So when you see this, does this scream any significance to you?
well, it didn't scream, like, the only significance it told me was, don't sell all your stocks now. When it hit the 200 period moving average, like, there was clients and others who were like, hey, should I sell? I want to get out. I heard I should get out of the market. It's like, well, now is probably not the best time to do that. You know, and other people know this, but now's maybe a time to wait, see what happens. And people that waited and saw what happened, they have a way better opportunity to get out now.
Yep.
And if they're looking at the monthly and the weekly, they may even have a better opportunity to get out even higher. So it's a bullish signal most of the time, but what happens what happens if we get to a time where price crosses below the 200 period moving average and stays below for the next 10, 15 years? Right? We look at this in history, be like, hey, like, it's always stayed above and it's kind of always been an uptrend.
Majority, yep.
But there's nothing saying that in the future, it can't be like in a 10-day, 10-year, 20-year
Yeah.
downtrend.
We're still used
And
to
we're-
this, and other countries have had it where they're in this long recession. They spend more
And I
time
think-
below. Before you move on,
Yeah,
if you
sorry.
look at the Nikkei, that average has been pulled up because it's been above it for so long.
Right.
Whereas if we look back 2008, even closer to 2000,
Since
it's
2009,
spent some time below.
2002.
A couple of years, 2 years maybe.
about 2 years, 2 years below.
Yeah, we
2
haven't
years
had
below.
that in a long time.
Yeah,
This might be that because the moving average has been brought up very quickly. That's a sharp increase.
Quantitative easing.
And it
Yeah,
hasn't had that ripple effect of actually smoothing out. It's been steadily rising.
and look at 2020 till 2022.
Yeah, that's a
This
sharp
is
increase.
pandemic. This is January, December 2021, January 2022.
Yeah, and 200 weeks is about 4 years.
Yes,
So that's an accumulation of the last 4 years.
exactly. 4-year average.
Yep.
Right? So the longer the average, the more time, the more data set, the more sample size, like the more significant these averages are.
Mhm.
So weekly, we hit a bullish bounce, fine, it's going higher, cool. I thought maybe it was going lower. I was focusing too much on the daily time frame, not paying attention to the monthly time frame. That's my mistake. I know that higher time frames take precedent. Now we look here on the monthly, look how far we are from the 200 period moving average on the monthly time frame. Like, there is a gap here. We are a 50% drop away from the 200 period moving average on the monthly time frame.
So this, you said 200 per
Pe-
monthly.
Yeah, so 200 months.
Okay, well, that's gonna be lower because you're looking at how many years ago?
So many more years. But it's like, look
Which
at
one-
this.
Yeah, we've looked at a few. Daily would look totally different as well. But do you think that this holds a lot of significance?
Yeah, I think the monthly holds more significance than the weekly.
Okay.
Yeah,
Well, that's scary.
it is scary. Yeah.
You think this drop is serious so far? This is scary.
Yeah, like, I'm not saying it's gonna drop right there.
Mhm.
Like, it could do another high. Eventually. And this is gonna creep up a little bit, like, that could happen. But eventually, there will be a time where these will meet. Okay, and I don't know. It's gonna happen. And I don't know if it's gonna happen in the near future, but it's just, it's bound to happen. Like, look at the weekly. For 2 years, price was just getting away from the moving average.
Pulling it up slowly.
Yeah, 4 weeks in a month, give or take. And then finally it retested. It hasn't happened on the monthly yet, but it probably will.
So this monthly only goes back to 2000 and,
I only have till 93 on this.
okay, because it's going back so far. Okay, okay. Yeah, because I don't see it touching. Like the weekly, it comes down
Yeah.
close to it like a magnet and then goes right back up again.
Yeah, it did here in 2010, 2011, after the sharp move down in 2008 and 2000. Right, like you could imagine that the moving average is probably something like this, right? Coming up, something like that, right? It's kind of coming up over time because this was in a long-term uptrend. If you zoom out, this goes further down, right?
Yeah.
So, like in 2008, 2009, when you bought the bottom, you were very close to the 200 period moving average. In 2020, when you bought, you were still a little bit further away. Which
Yeah.
tells me that buying stocks in 2008 was greater value than buying stocks in 2020.
For sure, for sure. And right now on the international stage, if people are looking to invest, and it's very easy to invest internationally, you can pull up the Kai for this conversation if you like.
Yeah, let's
Where
talk
do you
about that,
think
and then
people are
I think
looking at?
we'll end it. We'll finish off with this.
China, okay, yeah, China was a hub for investments for so long. People thought it was unstoppable. Right now, United States has looked like they're unstoppable for so long. I haven't looked at the indexes in China yet.
Okay, so let's look at some history with Japan real
Yep.
quick on the charts, and then let's look at how China's performed since the pandemic after. Okay. So the biggest thing that stands out to me about Japan, and this is the Nikkei, so it's the representation of Japan's stock market. The thing that stands out to me the most is the sharp move up from the 60s all the way into like the late 80s. Okay, so it's this move here. Okay, in that Japan was experimenting with a lot of money printing, quantitative easing, low interest rates, etc. The shock market
What we've had for how many years
since
now?
2008, pretty much. Like we've had a hardcore since 2008 and on steroids since 2020. So we saw the stock market go up for the Nikkei for Japan. We saw real estate values go up. And then we topped out in 1990, and we've literally been in a downtrend since 2009. And fast forward 2002 or 2022, we have still not passed the highs of 1990 in the Nikkei. Now, are we probably going to pass it? Yeah, I think so. I think Japan will probably pass it. But look how long you had to wait. Okay. Now there's people that just are heavily invested in North America and they're blindly buying into the S&P 500 and maybe bonds and like government bonds, like North American government bonds.
Yeah.
And there's an assumption that just stocks only go up.
Yeah. You hear
Real estate
people
only
say-
goes up.
They say what 8% historically, and I see tons of people now saying you don't need a financial advisor. Just put your money into an index following the S&P 500
Bullshit.
every month or every week. Everything's gonna be fine. And I'm thinking, really?
No, I don't think so.
I
don't think so.
It's
I
you
don't
can't
think so.
look behind you and try to drive down the road. It doesn't really work.
Now people say, oh, but like we're not like Japan.
We were doing the same things that Japan did in the 90s, and it's
Like Japan's a
nerve-wracking.
powerhouse economy. Like
Yeah,
Japan
You
at
buy
that
their
time
cars.
was top.
they don't buy our cars. We buy their
Japan was
cars.
bigger than China at that point in time.
I believe that. China,
Right. So if it could
China's
happen in like a strong economy like that, I'm pretty sure it could happen in our economy.
for sure.
Right. I'm pretty sure it could happen in like some Scandinavian economy or some.
For sure. And the currency, the Japanese currency would have to come into play for that to be
See, I got chart
apples to
art.
apples. But you can show it in a different currency, right?
Yeah.
Yeah.
Yeah. We can change this.
So yeah, China,
So China looks like it's springboarding right now. Like China, they're doing a lot of quantitative easing. They're trying to move the zero COVID policy. There's protests happening. This was the Evergrande lows when there was that Evergrande bankruptcy. This was the lows. And now we're approaching the Evergrande bankruptcy lows. So if you bought during that Evergrande fear, you actually did well for a little bit. The stock market went up in China, then it dumped. And if you just were buying into that, I don't know, this looks like it's ready to rip. And it looks like it's moving with the S&P. And let me get rid of all this drawing. The thing is, I don't have my data set doesn't go that far back. It only goes to 2018.
Yeah,
Let
I'd
me
like to see, we're trying to really got their stride with the exports.
see if I can get a better data feed.
Check. When I see all the videos of the protests in China, I mean, we never know what's really going on, what's propaganda, all that. But it's like, would you want to invest somewhere where a lot of their economy is based off of exports? And people might start boycotting them because of what the government's doing, and then that would stunt their exports.
I don't know if it's stunt their exports because it could.
I think it could, and
It could with like the United States, but you got to think there's a whole like Indo-Asia Pacific economy that's booming right now.
yeah,
That will buy from China.
yeah, Russia, China, like that eastern part of the world has something else going on,
Yeah, they will buy.
but I don't know how much of what they're buying would impact their market.
Right.
Because like I see what we have in China here are like consumer products. I don't know if they're the same over there. And I don't know how rich China is in their natural resources. Because all the lithium and cobalt mines are in Africa,
Right.
owned by people in China.
Right.
I don't think they have as much natural resources in China. I don't know.
I don't think they're that. They're not.
Well,
They're
it's
not a
successful.
natural. They're not a resource economy.
Yeah,
Definitely not. They're a cheap labor, abundant population, sort of productive and efficient, communist, but not really. But yes, type of economy.
yeah, capitalist, communist.
And the point is, looking at price action, like just looking at this chart, and we're gonna wrap up here. This is moving with the Fed speak. Okay, it's bottoming with the S&P, like it's moved October 17, 2022. This put in a bottom and it's gone higher ever since. Same with the S&P 500.
Okay.
So everything is correlated, like everything, it's almost like everything's one market.
Yeah, when you have stocks, they all move very, very
For the most
similarly,
part, like some of them,
even a new market.
like some of them move differently. Like, yeah, we saw Loblaws and McDonald's at all-time highs while Apple and Palantir and Amazon were crashing. But for the most part, everything moves together. Like emerging markets is kind of moving with North American, Western markets. And it's like, you're either buying the US dollar when you think all of this is going to crash, or you're buying equities when you think it's all going to go up, or you're selling US dollars. Like we saw the big sell-off today in the US dollar with Jerome Powell speech. Right, we saw this is the DXY, so measurement of the US dollar. So, when the Fed's talking about lower interest rates or not being so hawkish, right? US dollar is going to weaken. And, for me, I saw this move here. And I'm like, hey, maybe we have a bottom. That's a good chance for a bottom. But after today's candle, I'm not so sure. I think this is going to be a false bottom. And we'll see the DXY head lower. Let's zoom out. And look, we got further to go on the DX. That's the weekly. And currencies are going to be more volatile now with higher interest rates. So you want to pay attention. Lower interest rates, currencies are boring. High interest rates, currencies are a lot more fun. So like that is the DXY to the downside. And we saw where that moving average was. We probably come back into these levels, or we start a new downtrend. If we start a new downtrend in the dollar, it might be premature to say, but if we do, we'll see Bitcoin, we'll see stocks, we'll see everything go up. And when I zoom out, going all the way back to the 80s, these are lower highs. Lower highs are typically indicative of a downtrend. So we gotta, this could be the continuation of the downtrend right here. We'll see.
Yeah, it's that way. And you said that stocks are moving in the same patterns.
Yeah.
We saw this with crypto.
Yes.
Like Bitcoin would kind of move a certain way,
Yeah.
and the altcoins would follow the same flow.
Yeah.
Maybe not exactly, but they'd be more exaggerated.
Yeah.
Exaggerated highs, exaggerated down. People love the volatility. They really wanted to trade in those altcoins, and you can kind of look at mining of Bitcoin, the whales are buying, and kind of see and predict what's going to happen.
I try to 100%. I don't know what's happening exactly. Like I know miners, there's a lot of miner capitulation happening. So a lot of people are like, the cost of energy is too much and the profit's not enough. Right, so those are soft hands. The people who are gonna benefit are people that can absorb the costs, know that they're collecting Bitcoin and wait it out for that price of that Bitcoin to go up. Those are the miners who are gonna win. And not everyone's able to do that. What I'm, in terms of price, because I want to wrap it up, in terms of price, what I think people need to watch out for is how long are we gonna stay below the 2017, 2018 highs for Bitcoin? How long are we gonna stay below them? Because if the longer we stay below, the more bearish Bitcoin's gonna get. If we manage to quickly get back above these levels, I think we're gonna see Bitcoin rip.
And did this respond to
Yeah,
what Jerome Powell said?
yeah, let's
I
zoom
see a
in.
tick.
Let's zoom in, let's zoom in.
Tick up.
Yeah, so Bitcoin has not been this high since November 11th.
Okay.
So yeah, it was up on the news today. It was up on that Jerome Powell dovish tone or whatever, the softening of the hikes.
Dovish.
That's what they call it. That's dovish.
Yeah, you don't get it. This is kind of funny.
Dovish means interest rates down. Hawkish means interest rates up.
Hey, you didn't say interest rates down. That's the thing. People are
Yeah,
just-
or things that
Something.
lean, something that leans more towards interest rates down. So the softening of the hikes is leaning in that direction. It's more dovish than hawkish.
Yeah.
If he was saying, hey, like interest rates are gonna go up or the rate are gonna go higher or whatever the amount, they're leaning more hawkish.
So
Okay,
let's
Bitcoin.
hear a prediction. How high do you think rates are actually gonna go?
I think rates go up another 50 basis points, if that.
Yeah, that's it.
I think we get another 50 basis points if that's already priced in really in the market. I don't think bond yields go too much higher, to be honest.
If they're gonna do 50 basis points, they'll probably do 25 and 25.
Maybe,
Smaller jumps.
maybe. I just don't think it's gonna be like, I don't think we're gonna see, what really matters is the bond yields. I don't think we'll see bond yields head significantly higher, as I've shared before. And I've been saying this for a
It's
while.
already reverse course as well, which is interesting.
Yeah, I've been saying, yeah, I think since. Like, this is a reversal on yields, man. This is a reverse. Look at this. This is 1, 2, 3, 4 weeks down on yields, taking out critical levels now. From 4.3% on your 10-year to 3.6. That's significant. And if we look, let's use averages, because I know we're talking about that. Like, look where we are from the weekly average.
Yeah, still far away.
And even from the monthly average, still kind of far away on a monthly.
And the last time, I mean, before rates came down for 2020, when was this? What year was this? I can't see. It was close in, what year is that?
This is 2019, 2018.
2018. When was the last time it was this high?
Last time it was this high?
All the way back.
2008. Recession time. All right, Matt, I think that's it. I think we've given people a lot of information. We talked about a lot.
What are the key takeaways, would you say?
I don't know. I think people got to know, watch out for bond yields. Okay, higher yields, higher interest rates, higher cost of living, more inflation for you. Lower interest rates. Kind of keep the debt spiral going, but lower cost of living for you. Right, and stocks look pretty strong in the short term here. We saw that breakout on the monthly. Yields are coming down. Yields coming down is good for stocks.
Yep.
Right, so maybe now's not the best time to sell. Maybe wait a little bit, wait till the end of December. Maybe wait a couple weeks, see how price, if we get above that 200 period moving, if we stay above, maybe stocks keep heading higher, but don't think that stocks are gonna go forever. That's another thing. I don't think that. I think this could be a fake out and we do head a little higher and it quickly gets dumped.
So someone comes to you and says, Sergio, I just got an inheritance. I have a bunch of money. I have a long time horizon. Should I buy in the market now or should I wait?
Wait.
You would wait.
I do.
Leg down, buy in.
I'd wait. I wouldn't go all in into the stock market right now with a large sum.
Yep.
Maybe I'd take little bites as prices come down, but I would wait. I think we could have a serious. I think we have a serious correction still maybe ahead of us, to be honest.
Got it. So a couple months, you'll think better buying price. Maybe
Yeah.
still dollar cost average.
Yeah.
Cool.
Yeah.
Okay.
We good? Alrighty,
Good. Thanks for joining us.
stop sharing my screen. Thank you, everybody. That was a lot of fun.
Thank you. Till next time.